Mukul Kochar of Investec Capital Services joining us this afternoon to give us a sense as to what he's seeing. And Mukul, I'm just going through your note, and essentially you're betting big on India manufacturing and especially export related. We had spoken about this. We've spoken about how textiles is an opportunity, how EMS to a certain extent is an opportunity. But probably just to refresh the conversation a little bit, which sector segment commands the highest opportunity versus the risk reward available? Give us a sense first.
So first of all, thank you very much for having me here.
Very good having you.
And so since we last spoke, honestly, the theme in India is only getting stronger, convictions only getting higher. Which is manufacturing exports. We spoke about last time we were here. Some sectors where we see this benefit accruing. Electronics is one of them. Auto is another. Textiles, and we round it off with chemicals. Yeah. So these are the four sectors that we're watching. There are, of course, other ancillary sectors. Defense, for instance, it's actually, I put it a little bit as a part of electronics. Defense is a sector which is also doing phenomenally in terms of exports. But to answer your question, all this has to be for a stock market investor put in perspective of which sectors have more of this, story priced in. And I think there, the one sector that stands out the most in terms of opportunity to invest is auto and auto components. There, largely when we look at the stocks, is first of all, phenomenal set of companies over there. The two-wheeler sector in India is just, negative working capital, high return on capital, negative working capital, high return on capital businesses, excellent management, leading, global companies in India and trading at a sub 30 multiple. So first of all, that sector itself, it gets valued only on the Indian opportunity. And this sector broadly, including the OEMs and their suppliers, will have more of a global play, that investors should be aware of and should be betting on. The other sector, which is honestly not seeing a lot of good news or expectation priced in, is textiles. It went through multiple years of issues, including last year, where US put 50% tariff on Indian companies. And so coming off last year, results were poor, but you should see things getting better as the FTAs especially come into play. The bigger one being Europe, where Europe is the largest importer of textile goods in the world, larger than even US. So these two sectors, finally, I'll just sort of round it off with, in terms of opportunity, chemicals. I think a very broad sector, very fragmented, large number of companies there doing specialty chemicals, which is where India has a genuine advantage, even versus China for purity, skill, and even pricing in some manner. So I think there's a bunch of companies there to choose from, and chemicals. While electronics is the largest opportunity, I think there you get the most expensive companies. So for an investor, it may be happier, hunting in the first three sectors that I mentioned than electronics.
Mukul, you spoke about the opportunity which comes in, and a lot of FTAs are being signed with various geographies there. When is this opportunity getting translated into maybe revenue or profitability there? Is it going to be an immediate impact for many of the companies, or is a gradual uptick for many of them, as a result of which we are looking at 2 to 3 years before that entire theme plays out?
So very good question. Again, this is something that we get asked from investors a lot, that we've been expecting this manufacturing revival for a long time, but how can we sort of be sure that it happens this time? I think for me, it's a forward-looking statement. Two reasons I mentioned why the time has come. Of course, there was a lot of policy work done to get us here. GST, tax rate cuts, labor reform. So all those laid the groundwork over the last actually just 5-6 years. But why now is two reasons, which is falling cost of electricity as solar gains traction, and more importantly, the signing of FTAs. Just today there was this statement from Bosch that they plan to move their exports to Europe of air conditioners from India rather than Southeast Asia. And if you read that article, they have actually quoted that they're doing this after the signing of the FTAs because they like the fact that Indian trade is becoming more predictable. You'll see more and more of this happening, and more opportunities even getting created for Indian companies as on the timing, the European FTA gets operative in the first half of 2027. UK just became operative last month. US, while we already have a competitive tariff, certainty on the trade treaty we expect to happen in the next 3 months. So from here to, let's say, sometime mid of next year, all these trade treaties become operational. The benefit will accrue over the next few years.
Mukul, another thing which the street or investors have been betting on is the China plus one model, which we've been talking about. It hasn't actually played out much, except for some queries that have come in. Do you think that now that you have the FTAs in place, there is a real chance of this model now playing up?
Very, very good question. So you just take the history of China plus one. When did we start talking about it? It was in 2017. And when Trump first came, but that was largely a trade sort of, issue where people started saying, hey, China is, a non-market economy. We have a lot of deficits over there. Let's just sort of create some diversification, move stuff out from there, right? So, this became a risk issue, a supply chain risk issue post-COVID, right? So, which became one problem. And then when China weaponized its supply chain, where they sort of started using their supply or dominance in rare earth against global industry, that's when it became a genuine risk where people realized that we have to get out of there or build alternate supply chains. This happened over the last year or 2 years. Before that, it was just a buzzword. There was no pressure on industries to do anything about it. Now it has become a genuine risk, which both the governments and companies are aware of, that if they let 60, 70, 80% of any supply chain reside in China, China can flip the switch and just stop their businesses. And that realization has crept in over the last year. And therefore, the move is going to accelerate from here, undoubtedly. One statement again, I will make a quote from the German Chancellor, where he said during his campaign last year that if a Chinese company is investing in China and something goes wrong, please don't come to us for relief. Yeah, it was your decision. We think China is a risk. If you decide to invest, own that decision. Yeah,
Very
so
interesting.
nothing can be more clearer coming from a head of state, in terms of the direction which the government and the country is going to take.
No, point taken. Winds of change are there, but on ground, Mukul, have things changed for us? Because there are certain impediments. For example, logistics in China is far faster than India. Some of those things may take a stretched amount of time in India to both implement as well as possibly even change to a certain extent. You also have the concern that currently PLI is very supportive of exports. What if that were to reverse? Are we still as competitive from an export standpoint?
Very good point. I don't think you need to be competitive on price with China anymore. And that's the small point I'm trying to make. If it was only a matter of price, yeah, US would not have put a 30-40% tariff on China. It is inflationary in the US. Goods are being delivered in the US for a higher price. It has become a national security issue across products. There is no reason why smartphone supply chains move to India, because when they moved to India, despite PLI, India was still more expensive. But Apple invested time and effort to build a supply chain out here. That tells you that it's no longer about price. Yeah. So some amount of inefficiencies in logistics, in labor laws, in setting up new supply chains, some amount of inefficiency and pain the global supply chain will have to take, and there India will benefit.
This positivity around auto and auto ank, I'm trying to get a sense as to where should one place the bets. Should it be on the OEMs? But you seem to be clearly of the view that auto anks should likely do better. How should one pick and choose, even within that auto ank space?
Actually, both I think will do well. If you look at four-wheelers, they're announcing plans for exports. Maruti actually is short of capacity. They could sell as many cars as they wanted today, right? So Two-wheeler companies have an excellent business model, high ROIC, dominant market share globally. So the OEMs are also in a good spot. It's just that, it's a limited investment set, maybe 5 or 6 companies to invest in. The auto anks is just a very, very broad menu to choose from. One point is they benefit as the OEMs export, because by definition their goods also go out. Secondly, they can independently become exporters. So that way you're correct. I probably will get a lot more investment opportunities out of the auto anks. Yeah, but even autos are sort of, OEMs are attractive too. In the auto anks broad array of companies, we can't talk about specific companies, so I'll desist. But you look across, the supply chain, the tire companies, the two-wheeler suppliers, the four-wheeler suppliers, enough high-quality companies to go about trading at reasonable multiples.
Mukul, another aspect which we need to look at is some of the new emerging sectors where there is a lot of opportunity for us as well. Whether it's you have mobile phones and others which are coming through on the back of PLS support, but the recent thrust to manufacturing, whether it's precision engineering or whether it's substitution or country substitution, what we are talking about, even in the semiconductor space. Do you think that's something which is now be the focus in the next few years?
Absolutely. Trusted supply chain is not just a buzzword anymore. Look at the concern being articulated by the US defense personnel that there could be kill switches in electronics. So electronics trusted supply chain is already a reality, and India is part of that trusted network. And that's part of the reason why more and more of the electronic supply chain will move to India. So 100% trust across products, is important, and de-risking supply chains. They're actually, honestly, chemicals is part of a broad array of sectors, including defense. So you can actually sort of, put chemicals in a category of critical supply material for an economy, and which definitely needs to be de-risked.
Okay, Mukul, thank you so much for joining us. We've spoken about this. We've kind of covered this well in terms of breadth, hopefully. Thanks so much for coming and speaking to us.
Having me. Appreciate the time.